Hello traders, my name's Des Woodruff here at Grok Trade, Senior Analyst and Mentor. This video is good through the weekend, January 30th. Welcome to the weekend edition. And we have a lot to talk about. Right out of the gates, let me say this will be a video you will want to pass on to your other colleagues because it will be packed full of information, so stay with me here. Friday, we had the big GDP number come out. We came out at 3.2, but we expected 3.5. However, this was the largest pop that we've had since first quarter of 2006. Now, as if you've been watching the news, you know that Egypt's in turmoil. And that's shaken the markets quite a bit, and it's causing crude to also go up. Now, for all of you here in the United States, and any investors around the world, you should know that International Monetary Fund, the IMF, has come out warning the U.S. and Japan, saying that time's running out and that we need to get our debt in order or our credit rating will be affected. And we are seeing a nice little bounce in the US dollar, which will not bode well for the markets. But we do still have the Fed committed to pumping in $600 billion up until June of this year. And for you seasonal traders out there, you know that this is the time of year that the Nasdaq tends to be under a lot of pressure, and it did not disappoint, and that's precisely what we have going right now. We're going to be looking at a lot of indices here on all different time frames, but I want to go here and look at the GLD. And you'll remember me talking about this in yesterday's video. And what we have here, nice weekly. And the thing I wanted to show you was the support, and boom, support, did a touch and go. And this was something that, I was pretty jazzed about last night. And a couple of you guys mentioned that in the comments. But and needless to say, I'm in gold right now. I'm in gold and silver due to everything that's taking place out there in the markets. Let's start off here looking at the S&P daily. The S&P daily, this is the weekly. Let me get to the daily. Here's the daily. We have this little tight range. Look at this. Tight range. High base, we break out, bull pullback, we pop, bull pullback, but it was an ugly one. We rallied up, but we failed to hit the upper trend line like we did here. That goes into a rising wedge. Rising wedges are usually bad, and we come crashing down. Since November of 2010, this is the first time we've been below the 20-day moving average, and we closed below a support line at 1277. We just blasted through a bunch of support, and this all happened on some pretty significant volume too today. And what we have is big bearish divergence. We're still above zero, but we're threatening to go below the histogram zero line. That would be no good. Let me show you some sobering numbers here. Look at this. Dow down 1.4% on Friday. The S&P down 1.8%, 2.5% drop on the Nasdaq, and the same goes for the Russells. Huge numbers to the downside. Gang, you will not see this very many times in a year. Huge drops. A 25%, or knocking at the door of that, rise in the fear indicator, the VIX. Huge 2% drop in financials. Just a bloodbath on Friday. And let's look at the weekly here at the S&P. The weekly, we continue in this rising wedge. We do have commodity, or the CCI, it's the Commodity Channel Index, or the CCI, which is an oscillator. And this oscillator is reading overbought. So it doesn't surprise me that we're under some pressure here. We do have a higher high and a higher low from the previous week, but we have here a shooting star formation. And it certainly doesn't look great. If I bring in the monthly, We're continuing in this uptrend, but look how we're slowing down already. I mean, 1300 is a big time resistance area. And sure enough, it acted as resistance this past week. So now we're getting something that looks like a shooting star, but not. Usually a shooting star has an upper shadow 2 times that or more of the body, and we really don't have that, so I'm not going to call that a shooting star. So we do have a higher high, higher low, but we have a big upper shadow that could give us some problems here. If we do drop in going into this next month, making a new low, we will have broke through a big support trend line, and we will have solidified our rising wedge on the monthly chart, which is not great. Let's go up to the Dow. Here's the Dow. Dow came up, got above 12,000 a number of times this week, and but then today just took a nosedive above the 20-day moving average, though, and above the 0 histogram line. Let's bring in the weekly. The weekly are at major resistance. Let me move this out of the way. We have support, which now acts as resistance. You can see that. Resistance. And we did a touch and drop. Do you see that? Let's blow this up so you can see it. Touch. We got up to 12,020 and then dropped. That is a shooting star. Why? Because the upper shadow is 2 times that or more of the body with little to no lower shadow. Perfect. Shooting star on the weekly chart, and at the same time giving us what's called a bearish harame. So any drop below 11,800 going into next week is going to be problematic. Let's look at the monthly. The monthly here, nice uptrend. We're going up. Looks like the S&P. If it drops here, that will bring to fruition the rising wedge, and we do have stochastics in very overbought areas. So we are extended. We are seeing some resistance at 12,000, and if we drop, we do have a number of areas of support. We'll see if any of those can hold. Now, let's take a look here at the Nasdaq. Really interesting. Follow me here. Rising wedge, bearish divergence. We broke the rising wedge. What was acting as support then started acting as resistance. We dropped. We haven't pierced this trough yet, or that swing low, so I'm not going to call that a double top. If we go lower this next week, we will have confirmed a double top trend reversal pattern on the daily. And if that's the case, what you will see is this MACD and signal line dropping below the histogram 0 line, or the 0 line on the MACD. Big negative tick on the histogram. Now let's go here. I know I'm talking a lot of technicals. If you don't know technicals, just stay with me and continue to watch my videos on a very regular basis, and you'll start learning. Weekly chart going up, 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 up. Now we have what's called a bearish divergence on the CCI, and now we have an opportunity of a drop taking place. We tried to come up, but yet again, but these areas are acting as resistance. We're going into a range, but we're closed down below this 2706 area, which should have acted as support, but we busted that last week. If we do start down, next area about 2600. 2600. Russells. This one, instead of a double top, you're getting what's called a head and shoulder formation. Shoulder, head, and shoulder. Only when the neckline gets pierced, and that has not happened yet. Rising wedge, do you see these two lines? Right there, rising wedge gets broken. That support area, and we can go back in time, you can see that, I mean, this acts as a lot of support just going back in time. But what was support now acts as perfect resistance, and now we dropped from that area. We're below the 20-day moving average. 800 is proving to be a very difficult area of resistance, and we are decisively below the 0 MACD line. Not only that, we've rallied back up above it or to it, and now we're heading back down. That does not bode well. I drew a trend line right here. I copied that trend line to come up with this line. You can see they're identical. Drop it to this low right there, which would put us at the exact area of 764 will be support for small caps. So all of you who follow and trade my bull list on the Stock Picks V newsletter, this is a very important number that you want to watch, because that could be support and you could get a bounce right there. We have the 50-day moving average coming up. All right, here's the weekly. The weekly, we get a tweezer top and also a bearish engulfing, and we make a lower high on the weekly, and we're almost ready to make a new low. CCI overbought, and the next area of support would put us at this blue line at 754. And let's take a look here at the monthly. Nice uptrend. I took this line, copied it, put it right there. That could be an area acts as resistance. 800 is serving as an area of resistance. We have what's called a bearish thrusting pattern in the making. However, the month's not done yet. Monday will round out January for us. But right now it is a bearish thrusting pattern that could get ugly and fast, finding some support at this 775 area, and we have 765, which should, if we break 765, we're in a lot of trouble. 750 will be next in line. Next in line. And if I want to show you this, this is FinViz, and financials took a big hit this past week. Out of all of them, did the absolute worst. For the month, financials right in the middle, so I watch that really closely. For the 3 months, financials still kind of upper part of the middle, but I'm watching those financials very closely because the markets are only as strong as the financials. And for Friday, services, consumer goods, technology really took some big hits, and some of you just need to learn how to trade. And let me help you out. If you go here to Free Online Trading Education, click on this big link right here, New Trading Education 101 videos. There are 5 courses with many, many lessons. There's 30 lessons under here. And in these 30 lessons, you're going to learn what trading is all about. However, what I really want you to do is click here on Trading Education. When you click on Trading Education, you're going to see this. You're going to talk about, what the one-on-ones are and whatnot. But if you just want to jump ahead and you want me to teach you how to trade, I've been doing this for 13 years. Just click on Sign Up Now. And doing that, I'd ask that you just watch the video first. Watch the video and then read everything here. And I will show you what it is, how to trade in the markets. I'll be giving you 13 years of education. But regardless, maybe that's for you right now, maybe it's not, but at least go to the chart school and learn from all this free education. We put a lot of information in here, and we believe it's the best chart school out there today. And but anyway, if you are interested in any of our information, partake of it. I mean, really submerge yourself into the trading information that's here. If you want my stock list each week, go to the V newsletter, and I'm going to give you a code When you sign up, in the promotion box, put in the number 2 and the letter week, W-E-E-K, 2 week. The number 2, W-E-E-K, will give you 2 weeks free. 2 weeks free of the V-newsletter. You can try it on for size, see if you like it. Take care. Safe trading to each and every one of you.